All right, let's break down the massive shift in market sentiment we've seen this past month.
It is amazing what a difference a month can make. The entire economic picture has been completely redrawn. Just look at the contrast. We went from rose-colored confidence to a market totally clouded by uncertainty.
So, what was the catalyst? A military campaign on Feb 28th. That's what changed the market's trajectory.
And the market's response was, well, swift. Let's dig into the immediate economic fallout.
First up, oil prices. They just skyrocketed because of disruptions in the Strait of Hormuz.
Then you have the 2-year Treasury yield, which is super sensitive to Fed policy, spiking dramatically.
And it wasn't just the 2-year, the 10-year jumped too, signaling some serious inflation concerns.
All this completely flipped Fed expectations. Hopes for a rate cut are now basically zero. But here's where it gets really interesting. There's this huge disconnect between prices and earnings.
So, stock prices dropped, but earnings estimates, they actually went up. Stocks look cheaper on paper.
Which brings us to the million-dollar question, right? Can we really trust those earnings estimates? So this analyst has identified 4 critical red lines for the market. Let's take a look. Crossing any one of these thresholds could trigger a significant policy or market response.
Okay, so what does this mean for you? As we get close to these lines, some opportunities pop up.
But, and this is a big but, it's not an all-in situation. Caution is absolutely key here.
So the strategy is pretty clear. Start legging in carefully. Don't just dive in headfirst.
And that really leaves us with the core challenge. How do you balance cheaper prices with riskier earnings?